Hi everyone, welcome back to the channel. Have you ever felt excited to start investing, but then lost money almost immediately? You're not alone. Most new investors make the same handful of mistakes, not because they're dumb, but because the world of investing is full of hype, bad advice, and emotional traps. In this video, I'm going to walk you through the top 5 mistakes new investors make, and more importantly, how to avoid them. If you're just starting out or want to improve your investing game, this one's for you. By the end of this video, you'll know exactly what not to do with your money, how to protect yourself from big losses, and how to build long-term wealth the smart way. This video is for informational and educational purposes only. I'm not a licensed financial advisor, and this is not financial or investment advice. Always do your own research or consult a certified advisor before making any financial decisions. With that said, let's jump in. Mistake number 1: chasing hot stocks or trends. We've all seen it. A stock is suddenly everywhere in the news, on Reddit. Maybe a friend tells you this one's going to the moon. So you buy it only to watch it crash a week later. This is the classic FOMO trap, fear of missing out. You're chasing hype, not value. Real example, GameStop in 2021. Some people made money, but a lot more lost big when they bought into late. How to avoid it? Stick to a plan. Don't buy just because something's trending. Invest in what you understand and make sure it fits your long-term goals. Mistake number 2: not understanding what you're buying. If I gave you $1,000 and asked you to invest it in a company, would you pick one just because someone on YouTube told you it's the next Amazon? Sadly, many people do. They don't understand the business, how it makes money, or why it might grow, and this turns investing into gambling. How to avoid it? Before you invest, ask yourself fundamental questions. What does this company do? Is it profitable? Is it growing? Do I believe in its future? And if you're not sure, start with broad ETFs like the S&P 500. It's a great way to own many companies at once without needing to be a stock-picking expert. Are you enjoying the content? Hit subscribe. It's completely free, and you'll get easy-to-follow tips on investing, saving money, and building wealth delivered straight to you. No noise, just real value at no cost. Let's grow smarter together. Mistake number 3: investing all at once. Let's say you finally save up $1,000. You're excited and invested all on Monday. Then the market drops 5% on Wednesday. Ouch! You didn't do anything wrong, but you exposed yourself to timing risk. How to avoid it? Use a method called dollar cost averaging. It means spreading out your investments over time. For example, 100 every month or week. This smooths out the highs and lows of the market and protects you from investing everything at a peak. Mistake number 4: ignoring fees and taxes. This one is sneaky. You find a hot mutual fund or app that promises high returns, but behind the scenes, it's charging you 2% in fees every year. That may sound small, but over time, fees eat into your returns. And don't forget taxes. Selling too often or making short-term gains can hit you with capital gains taxes that you could avoid. How to avoid it? Choose low-fee ETFs or brokers under 0.2% is ideal. Learn the tax rules in your country. Holding long-term is often better tax-wise. Don't day trade unless you're ready for tax headaches. If all the catches you hear and you want to get more insight into the topic, then here are some great book suggestions. The 5 Mistakes Every Investor Makes and How to Avoid Them by Peter Mallouk and Tony Robbins. A user-friendly guide that breaks down major investor pitfalls like emotional investing, overconfidence, and lack of diversification into actionable advice on how to recognize common mistakes and apply practical strategies to avoid them in your investing journey. Check the affiliate links in description. Next, Investment Mistakes Even Smart Investors Make and How to Avoid Them by Larry E. Swedroe and R.C. Balaban. This highly rated guide outlines a comprehensive list of more than 70 mistakes with clear explanations, making it feel like an investor's first aid kit. It teaches how to avoid emotional and cognitive biases, better manage investment costs, and stay disciplined through market turbulence. Big Mistakes: The Best Investors and Their Worst Investments by Michael Batnick. A compelling narrative about famous investor missteps, from Warren Buffett to John Paulson, offering real-world lessons from top investors. The book shows human side of investing mistakes and how even legends learn from them, making this a powerful tool for anyone serious about investing wisely. Mistake number 5: Panic selling in a downturn. This might be the most damaging mistake of all. You invest, the market crashes, you panic, you sell. And now, not only have you lost money, but you've locked in the loss. There's no way to recover. Markets go up and down. That's normal. In fact, downturns are part of the process. They're when smart investors buy more, not run away. How to avoid it? Zoom out. If you're investing for 10 to 20 years, a crash today is just a small dip in the big picture. Have an emergency fund so you're not forced to sell. And remember, you only lose when you sell low. Let's recap those top 5 new investor mistakes. Chasing hot stocks, not understanding what you're buying, investing all at once, ignoring fees and taxes, and finally panic selling during market drops. If you avoid these, you're already ahead of 90% of beginners. Investing isn't about being perfect. It's about being consistent, patient, and informed. Did you find this helpful? Smash the like button and help us grow. Drop a comment below. Have you made one of these mistakes before? What did you learn from it? Subscribe for more tips on saving, investing, and growing your money the smart way.